Hey everyone, welcome to Smart Investing. Today is May 9th, Tuesday. It is 8:40 a.m. So for today's video, we have here the continuation of the banking services sector. I'm only going to be doing 3 stocks. We're going to see how well they are performing. And let's begin. So for the first stock that we have is FCF, First Community Financial. FCF for the first page. Looking at the numbers, they look pretty awful. Last 5 years, looking pretty flat. You see these ups and downs. Returning to its 200 EMA, pretty much. And we have it right now as of below the 200 EMA on the 5-year. Let's look at the 1 year. So definitely below the 200 EMA, which is a long-term trend. The banks are doing pretty bad still. So again, it's been almost 2 months since the banking failure. So 2 months is quite a little while for it to be, considered a short-term trend. I already think this is going to be a long-term trend. So we're going to look into more numbers here. So for the first page, looking at it, 52-week high, 52-week low, looks awful. Dividends, nothing really good about this company that I see. Undervalued. Sales, not much. I'm going to just skip all that and look into more interesting factors. 7 analysts have rated this, so we have a majority that are saying hold on this company. I don't know why. Let me get, where are my indicators? Excuse me guys for a second. Here we go. I was looking for my indicators. I don't know why that did not show up. So there we go. My video indicators, I mean. So I'm not gonna look at the analyst price target. It's pretty inaccurate. It's meaningless, really. So we're gonna look at the quant ratings. Quant ratings, we have highest number that we have, quality. Disagree with that. Lowest number is momentum. I can definitely see that happening because people are pretty bearish on the stock. So I don't know about anybody else, but I think it's easier to make money when it's going down rather than it's going up. Excuse me. Obviously, there's more fees when you're short, but the gains are tremendous when you know what you're doing and when it is done correctly. So for the most part, the quant ratings out of all these numbers, I don't agree with any of the numbers. Value, maybe. Quality, not at all. Growth, not at all. Income, not at all. Momentum, that's the only factor that I can see fit that is a yes. Overall rating, they gave it a 3 out of a 5. I think it's way less than that. Pretty much like a 1 or less than 1, like half a point, really. So it really has nothing going for it. I'm going to look at some estimates and some more financials. We're going to look at some fundamentals. So it's missing earnings estimates. The last 4 times, it met only 1 out of the 4, the last 4. So as we can see here, high expectations, I don't know why, that have been raised. I don't know what the reasoning is. We went from a drop all the way to a really big pickup. It doesn't seem like much, but just the gap alone is a lot. So this distance here is pretty much at least a 10-cent differential. I'm gonna look at some annual estimates. That way we can include higher and better accuracy. Excuse me. ROA was at 1.3. ROE less than before. Earnings per share, I'm expecting this to actually drop down. Net margins, debt is actually about the same, actually higher from the past 5 years, as we can see. Again, I'm sharing 2022 estimates. So book value per share, I don't really look at those numbers. Net income and revenue. Net income, it falls pretty much in the middle. Whoops, apologize for that. I don't know why. I think I was lagging a little bit. I think my connection was a little bit laggy. So yeah, not too bad. Revenue, I don't have. Balance sheet, pretty awful. Cash flow, this is what we really want to see. So negative cash flow at about, let's see, let me do my math. So that's 200, 350, 150, between 220 million and 250 million of negative cash flow. Definitely doing bad. I don't know why they would continue to pay dividends. We'll look at that now. And it looks like they did continue to pay dividends, and it's about the same. So, awful company. Again, not even worth it. Ticker symbol FCF, and the name is First Commonwealth Financial Corp. Moving on to the next one. The next one that we have is USB. USB, we have here $45 million market cap. This is where I'm looking at. Price is at $29.74. Dividend 1.92. 52-week high and low. Not bad. And obviously, this is the company that has bought out. What was that other bank? There's so many banks. It bought out. What was that bank? Anyways, we'll look in the news real quick. So this was just bear with me while I look at so many names in my head. That's why. So I apologize. They bought out that European bank like a month ago. It's on the tip of my tongue. I can't even. I know it was a short name for it. It was a short name. Not by Silicon Valley. Where is it at? It was back in March, so I'm looking at the news here. Bank stocks. So yeah, as I'm scrolling through this, so yeah, the banking sector as a whole, again, it's just going to be a long-term negative trend. Even Moody's has downgraded the whole sector. I've been bearish on it for almost 2 years now. So that only says a lot on my end. I was actually pretty much a year and a half early looking at this, almost 2 years. Looking at this, going over the banking sector, so that makes me one of the few that actually recognize bad companies and what to look out for. So I'm happy about my turnout, and my decision making. So I'm still looking for it. Let's Google it. Go to Google it. So USB, USB, Credit Suisse. Credit Suisse. That was the name of it. So Credit Suisse was the name of the bank. So there we go. Apologize. I just wanted to get the name. So again, looking at the first page, nothing very interesting. Looks okay. So these big banks are getting bigger. Let's look at the 5-year. We can see this big drop and a secondary drop there. Very, very devastating. And obviously their numbers have dropped because yes, they have bought out Credit Suisse, but then, it takes time to acquire those shares. I don't know if it was a cash deal or not. I think it was an all-out share deal. Obviously, a buyout is everything acquired. So obviously, when you make purchases, big purchases like that, your pricing goes down because you just spent money on those big purchases. So moving on to and I really think based on the charting, this is going to be a long-term downtrend. This is another big bank, but again, they'll survive, but they're going to be in a long-term downtrend. So moving on to the analysis part here, we already went through the news feed, so going on to the news, we have here the quantitative ratings. We have the lowest rating of 4 and 25 growth. I don't agree with that number. Momentum is at 5.74. I do agree. The number's a little bit higher. Again, I see some shorts coming on to these higher price stocks because they have more room to go down. So that spread and differential can only add more money into the short selling, which is obviously more profit taking. So again, this company will survive, but another long-term downtrend. So we want to look at some fundamentals. Let's look at the dividends if they pay. So 48 cents, they continue to pay 48 cents in dividends. I think once a bank acquires one company, another bank, I haven't seen a bank acquire more than one. So it'll be very interesting with compared to the 1980s, I think there were about 16,000. Now there's about 4,000 banks in total, aside from the public market, including private. So we're talking about 4,000. And then again, out of 4,000, I don't know, you have about a quarter of those banks in the public market. Now, out of the public market, again, I think it would be hard for one bank to buy out multiple banks. That's just a scary situation. Yes, they'll get bigger, but it's just harder for them to accumulate all that when they're going to acquire even more debt. And again, a lot of these balance sheets are just awful. So it makes no sense to do that, to go overachieving when they really need to prioritize and work on their numbers and stabilize their balance sheets. So looking at the financials here for their fundamentals, I'm going to look at the yearly, annual. So ROA, it's not giving me anything. Maybe I'm lagging or something. I will close it and open it again. So we have here the company for, that wasn't it. It was USB. So USB, we have here the annual. So there we go. It has dropped from last year. The ROE has dropped a little bit. Earnings have dropped from 2021, obviously. No, I don't have any info for net margins. Debt has gone up a little bit more, as you can see. Oh, sorry, you can see here these moves here. Net income, it is at 5.84. Nothing on revenue. So net income up and down. It's gone up and down in the chart, if you can see. Cash flow, which is what we really want to see. Going to see here and investigate. 21 billion, so we have about 28. So cash flow is actually pretty good. So again, this is a company that already acquired another big company. These are one of the few banks you can watch list. I really think they're gonna have more declines. If you're short selling, this will be a nice short sell stock. With the pressure being added that they just bought a bank, and I see new lower lows. They broke the floor right here from their previous lows, and then right here they broke that second floor. Sorry, that secondary ceiling headed to a floor. So basically, they're going lower levels into the technicals, and it would be some nice profit taking for the week or maybe for the day. Again, very short term strategy here. So next one up is FBP, and that's the last one that we have. $10.96. It's been holding up okay. A $2 billion market cap company. It's slightly on target for its 200 EMA. It's starting to drop as of right now. Very delayed company, but it seems to look okay. They do pay dividends. Earnings per share is at 1.5. It needs a lot of work. Like it looks like it's barely surviving and wants to survive. If the market cap was a little bit stronger, this one's very, very tricky. If it was more than 10 billion, maybe, but it's in the $2 billion mark. Again, anything can happen, so this company is very, very tricky. So we're gonna look at the analysis here for the quants. It has no momentum, so it looks like not a lot of investors are interested in this stock. Quality, they gave it a 9, number 9. I'm surprised they rated it that high. I don't know why. Financials, so they're beating earnings the last 4 times actually. So we have in Q2 lowered expectations, and we'll see if they can handle that. So that's actually not too bad if they lowered expectations on that stock. ROA is at 1.5. ROE has gone up. Earnings per share has gone up. Margins I do not have. Debt has gone up, as we can see right here based on the numbers. And cash flow is what we want to see. Revenue is not giving me anything. Income looks okay. So balance sheet is looking worse and worse. Cash flow is what really we want to see here. So we have earnings reports here. Some companies there. I don't recognize most of these companies. So anyway, thank you, Webull, for the notification. Whoops, sorry. I don't know why that happened. So cash flow we have here. Looks like they have negative cash flow. Definitely over 2 billion in negative cash flow. Horrible numbers then. So obviously do not add that to the watch list. So the only one that made it was actually USB to the watch list. So there you have it. It's been a while since I've actually recommended one to the watch list. Again, it's not good for I guess, till the end of the year for USB. But hopefully next year they do better, and we'll see what happens. That's all I have for you guys. So again, thank you guys for watching, and I'll see you guys in the next one.